It's so easy to get lost in the constant headlines about U.S.-China relations. We see them, maybe scroll past, sometimes think it's just more political talk, right? But what if those high-level discussions, the ones behind closed doors, actually have a really immediate, tangible impact on something? Fundamental. I mean, the actual routes our goods take, the prices for everything, the stability of, our whole supply chain. Today, we're going to try and cut through some of that noise. We're zeroing in on a specific set of talks that just wrapped up. The U.S.-China negotiations in Madrid.
Exactly. And that idea of political theater,
Mm,
that's precisely what we need to look past here. Because, well, yeah, some people might just dismiss these meetings. They actually carry immediate weight for global commerce, really significant weight. For anyone moving goods, maybe you run a small business importing parts, or you're managing complex logistics for a huge retailer. These talks, they dictate costs, timelines, maybe even where you source from. So our mission here in this deep dive is basically to help you understand what's really going on and, crucially, why it matters for your operations, your bottom line.
Welcome to Logistics Pulse, sponsored by Mothership. Skip the broker to save big on LTL shipments, or deliver same day nationwide.
Okay, so let's unpack this. It's a delicate situation right now. For months, global shipping has been feeling these tremors from tit-for-tat tariffs and tech skirmishes. For anyone maybe not following super closely, tit-for-tat here means, one country hits with a trade restriction, the other hits back.
Yeah.
Back and forth, escalation.
Right.
It's created this really uneasy backdrop for trade. Makes long-term planning, well, incredibly tough for businesses.
That's absolutely right. And the specifics right now, it's an uneasy truce, a temporary pause in that escalation. Washington and Beijing, they dialed things back over the summer. So currently, there's a 30% U.S. tariff on Chinese goods, and China has a 10% tariff on U.S. products.
Right.
And that difference, it's not random. It affects import-export strategies differently depending on the product. Companies have to rethink margins, sourcing right now. But here's the really critical part. It's basically a ticking clock. It runs out in November. When you dig into the sort of diplomatic language around this, things get really interesting. The U.S. Treasury Secretary, Scott Bessent, he actually sounded pretty confident after Madrid. He's hinting a deal can be struck before November, saying talks have become more and more productive. That feels like a shift, doesn't it, compared to a few months ago? Suggests real movement, maybe not just talk. Well, what's fascinating is just how high the stakes are. For shippers, for carriers, it's huge. Imagine you're, let's say, a procurement manager right now. You're looking at that November deadline. Are your suppliers hedging? Shifting production, maybe? Because if this truce collapses, boom, costs spike. Those 30% and 10% tariffs, they could jump way higher. Routing decisions become a moving target, and this is happening just as retailers need to move all that critical holiday freight.
Exactly the worst time.
Precisely. So for you, the listener, this isn't abstract economics. It hits how quickly and at what cost things get to you. Your phone, holiday gifts, everything. It's about supply chain predictability.
Okay, so tariffs are one big piece. But there's another massive factor here, acting as both a source of tension and maybe opportunity. Technology. It's really reshaping these trade talks.
It really is. And one of the most significant things out of Madrid, maybe even a breakthrough, was this framework to shift TikTok to U.S.-controlled ownership. Now, this seems to do two things. One, it tries to ease American fears about national security, data privacy, potential Chinese government access. But it also lets Beijing preserve what it calls the app's Chinese characteristics, the core algorithm, its operational roots, basically. This development, if it gets confirmed, well, it's given the talks some unexpected momentum. It shows a possible path for compromise on tricky tech stuff.
That does sound significant, but
Yeah.
how fragile is that momentum? These things can change so fast, right? Is there a risk Beijing sees this TikTok thing as more of a concession they were forced into?
That's a really critical question. It's never quite that simple, is it? And it raises this important point about how deeply trade and tech policy overlap now. It's a whole new risk category for logistics. So yeah, there's optimism around TikTok, but you have to look at the counterpoint that emerged almost immediately. Even as the Madrid meetings were wrapping up, Chinese regulators announced an antitrust probe into NVIDIA.
Oh, okay.
It's a stark reminder, really. Controls on semiconductors, those vital chips and rare earths, essential for high-tech manufacturing. Those are still very, very live fault lines. The tech landscape is clearly a battleground just as much as it might be a bridge. Both sides are pushing for, tech sovereignty.
So does that NVIDIA probe kind of neutralize the goodwill from TikTok? Or are they just separate tracks moving at the same time? Feels like push and pull.
It absolutely is. Constant negotiation, often on multiple fronts. You could see the NVIDIA probe as Beijing reminding Washington, hey, we have leverage in tech too, especially with antitrust. And these aren't just policy games, they hit businesses hard.
Yep.
So, okay, what does all this geopolitical back and forth mean for actually moving goods? How are the freight markets reacting right now? What's the immediate pulse?
Well, we're already seeing it in the numbers. Trans-Pacific container rates, China to the U.S. West Coast, they jumped 7% in mid-September, now sitting around $2,300 for a 40-foot box. That's roughly a third higher than just a few weeks back. It's a sharp, quick rise. Tells the story.
And analysts, they're saying this isn't just random market noise. This jump reflects importers racing the clock, trying to get goods in before that tariff truce potentially expires in November. It's that classic front-loading strategy. You pull demand forward to beat the deadline, creates these sudden surges.
Right, the pre-tariff rush.
Exactly. It really shows how even the hint of new duties can jolt demand and pricing across the ocean networks. It's a powerful signal. We're also seeing carriers doing things like strategically repositioning vessels, moving ships around. They're navigating things like blanked sailings, canceled port calls or voyages to manage capacity. And they're adjusting for the upcoming Golden Week factory rushes in China, too. That pre-holiday surge, then the quiet period. It's a dynamic environment. Carriers are trying to capitalize.
Oh, wow. It sounds like navigating all this, the tariffs, the market shifts. It's like playing 3D chess, where the rules keep changing mid-move, really highlights the need for agility.
Absolutely. And, despite maybe some moments of optimism or perceived progress, it's really important to stress Madrid was not a clean reset. This isn't a fresh start. It's just one step in this ongoing, super complex dialogue where both sides still have grievances, still hold cards.
That's a crucial distinction. So what are some of those lingering issues, say, from Beijing's side?
Right. Beijing still has its list. They're still bristling at Washington's pressure on rare earth exports. China controls most of those critical minerals globally, vital for electronics, defense. They also resent the U.S. push for allies to slap tariffs on Chinese purchases of Russian oil. They see that as infringing on their economic decisions. These aren't small things. They're deep, persistent issues tied to broader strategic competition. They're still very much on the table.
And from the U.S. side, negotiators hinted that any potential Trump-Xi summit later this year, which would be huge, diplomatically, it hinges on progress that goes beyond just TikTok. So yeah, TikTok offered some momentum, maybe a template for compromise, but it's not the whole game for a broader reset. The U.S. wants movement on those deeper issues, too.
Exactly. And if we connect this to the bigger picture, that TikTok framework, it's less a final resolution and more like a sophisticated bargaining chip. It signals what cooperation can achieve if both sides are willing. But it also highlights starkly what both sides could lose if talks stall or, worse, collapse. It's this delicate balance, sort of carrot and stick. Shows that even with huge disagreements, there's a mutual interest in preventing total economic decoupling. Maybe managed competition is a better term than détente.
Okay, let's try to pull this all together for you, our listener, especially if you're moving freight, managing supply chains. 3 really crucial takeaways from all this. Actionable insights, hopefully.
Okay, first, plan for whiplash. Simple as that. Even if November brings some kind of agreement, the political winds can shift incredibly fast. We've seen it again and again. So the advice here is proactively diversify your sourcing. Don't have all your eggs in one basket, geographically speaking, and try to negotiate flexible freight contracts. That flexibility can help cushion you against sudden cost jumps or rerouting nightmares if policy pivots without much warning. Builds resilience.
That makes total sense. Flexibility seems key. Okay, what's the second takeaway?
Second, read the demand signals. That recent surge in container rates, perfect example, real time. It shows how tariff deadlines, even seasonal things like Golden Week, can trigger that front loading we talked about. So understanding these patterns, seeing them coming, it means you can maybe build an extra capacity or lock in rates earlier. That proactive stance helps you avoid paying those peak premiums when everyone else is scrambling. It's about getting ahead of the curve.
Proactive, not reactive.
Got it.
And finally, the third key takeaway for logistics and supply chain folks.
Lastly, and this is relatively new but really powerful, factor in tech policy as a logistics risk. Think about it. Export controls on chips could halt manufacturing. Goods then can't ship. Or a digital platform dispute like TikTok could suddenly restrict data flows needed for smooth international commerce, even just tracking shipments.
I hadn't quite thought of it that way.
Right. These aren't just policy moves anymore. They ripple through ports, warehouses, just as surely as a tariff hike does. In today's world, the next policy decision in Washington or Beijing could literally reshape your freight flows overnight.
It's crystal clear then. These are not just high-level abstract discussions in faraway places. They have immediate, real-world implications for your operations, your business, and ultimately for how goods move around the planet and reach us all. That ability to predict, adapt, build resilience, it's more critical than ever.
Absolutely. We've really explored a fascinating, delicate balance today. This mix of potential breakthroughs alongside these really deep, entrenched issues in global trade. It's a landscape where, yeah, political theater can become very real, very fast. So maybe the final thought is this. In this world where a policy choice in D.C. or Beijing can reroute ships overnight, what new strategies, what innovative approaches will businesses need most to stay resilient, stay agile, not just for next quarter, but for the next decade?
That is a really thought-provoking question for all of us to mull over as these dynamics keep shifting. Thank you so much for joining us on this deep dive. Keep watching these developments. They really do touch every corner of our global economy. We'll catch you next time.
For more insights like these, don't forget to subscribe to Logistics Pulse on YouTube, Spotify, or wherever you get your podcasts.